As an experienced writer, I'm excited to delve into the pivotal role the Federal Reserve plays in shaping the economy. The Federal Reserve, often referred to as the Fed, is the central banking system of the United States, and its actions have far-reaching implications on the financial well-being of individuals, businesses, and the nation as a whole. Introduction to the Federal Reserve. The Federal Reserve was established in 1913 with the primary goal of maintaining a stable and healthy economy. It is responsible for setting monetary policy, regulating the banking system, and overseeing the nation's payment systems. The Fed's actions have a direct impact on interest rates, inflation, employment, and overall economic growth. The history and purpose of the Federal Reserve. The Federal Reserve was created in response to a series of financial crises that plagued the United States in the late 19th and early 20th centuries. Prior to the Fed's establishment, the country lacked a centralized banking system, leaving it vulnerable to economic instability. The Fed's mandate is to promote maximum employment, stable prices, and moderate long-term interest rates, the three pillars of a thriving economy. The structure of the Federal Reserve System. The Federal Reserve System is composed of several key components: the Board of Governors, a 7-member board appointed by the President of the United States and confirmed by the Senate. The board is responsible for setting monetary policy and overseeing the Federal Reserve's operations. The Federal Open Market Committee, FOMC. The FOMC is responsible for conducting the nation's monetary policy. It is composed of the 7 Board of Governors members and 5 Federal Reserve Bank presidents. The Federal Reserve Banks. There are 12 regional Federal Reserve Banks that act as the operational arms of the Federal Reserve System. These banks are responsible for implementing monetary policy, supervising banks, and providing banking services. The role of the Federal Reserve in the economy. The Federal Reserve plays a crucial role in the economy, serving as the central bank and the lender of last resort. The Fed's primary responsibilities include monetary policy. The Fed sets monetary policy by adjusting key interest rates, such as the federal funds rate, to influence the money supply and achieve its economic objectives. Bank regulation. The Fed regulates and supervises the banking system, ensuring the safety and soundness of financial institutions. Payment systems. The Fed oversees the nation's payment systems, including the clearing and settlement of checks and electronic payments. Economic stability. The Fed works to maintain financial stability and mitigate the impact of economic shocks, such as recessions and financial crises. How the Federal Reserve sets interest rates. The Federal Reserve's primary tool for influencing the economy is the adjustment of interest rates. The FOMC meets regularly to review economic conditions and make decisions on the federal funds rate, which is the interest rate at which banks lend to one another overnight. By raising or lowering this key rate, the Fed can impact other interest rates throughout the economy, affecting consumer and business borrowing, spending, and investment. The impact of Federal Reserve interest rates on the economy. Changes in the Federal Reserve's interest rates have far-reaching effects on the economy. Lower interest rates generally stimulate economic activity by making borrowing more affordable for consumers and businesses, leading to increased spending and investment. Conversely, higher interest rates can slow down the economy by making borrowing more expensive, which can lead to reduced spending and investment. The Federal Reserve's monetary policy tools. The Federal Reserve has several monetary policy tools at its disposal to achieve its economic objectives. Open market operations. The Fed buys and sells government securities, such as treasury bonds, to influence the money supply and interest rates. Reserve requirements. The Fed sets the minimum amount of reserves that banks must hold, which affects the bank's ability to lend and the overall money supply. Discount rate. The Fed sets the interest rate at which it lends directly to banks, known as the discount rate, to influence the overall level of interest rates. Forward guidance. The Fed provides clear communication and forward guidance about its future policy decisions to shape market expectations and influence economic outcomes. The Federal Reserve's role in stabilizing the economy during times of economic turmoil. The Federal Reserve plays a crucial role in stabilizing the economy. The Fed can use its monetary policy tools to stimulate the economy during recessions, mitigate the impact of financial crises, and promote sustainable economic growth. For example, during the 2008 financial crisis, the Fed took unprecedented actions, such as lowering interest rates to near-zero levels and implementing large-scale asset purchase programs to support the financial system and promote economic recovery. The Federal Reserve's role in financial regulation, in addition to its monetary policy responsibilities, the Federal Reserve also plays a significant role in regulating the financial system. The Fed oversees the safety and soundness of banks, ensuring that they maintain adequate capital and liquidity levels to withstand economic shocks. The Fed also works to identify and mitigate systemic risks that could threaten the stability of the broader financial system. The Federal Reserve's communication and transparency. The Federal Reserve has made significant strides in improving its communication and transparency in recent years. The central bank now provides detailed statements after each FOMC meeting, outlining its policy decisions and the rationale behind them. The Fed also regularly publishes economic projections and testimony from the chair of the Board of Governors, allowing the public and financial markets to better understand the Fed's decision-making process. Key events and decisions made by the Federal Reserve throughout its history. The Federal Reserve has played a pivotal role in shaping the U.S. economy. Some of the most significant events and decisions made by the Fed include: 1. The response to the 2008 financial crisis, which involved unprecedented measures to stabilize the financial system and promote economic recovery. 2. The decision to raise interest rates gradually from near-zero levels in the aftermath of the Great Recession to normalize monetary policy. 3. The implementation of large-scale asset purchase programs, known as quantitative easing, to stimulate the economy during periods of economic weakness. 4. The ongoing efforts to maintain price stability and promote maximum employment through the adjustment of key interest rates. Criticisms and controversies surrounding the Federal Reserve. The Federal Reserve has faced its fair share of criticisms and controversies over the years. Some of the most common criticisms include: 1. Concerns about the Fed's independence and potential political influence. 2. Debates over the effectiveness and appropriateness of the Fed's monetary policy decisions. 3. Criticism of the Fed's role in financial regulation and its perceived failure to prevent the 2008 financial crisis. 4. Concerns about the Fed's transparency and communication with the public. The future of the Federal Reserve. As the economic landscape continues to evolve, the role of the Federal Reserve will likely continue to be a topic of ongoing discussion and debate. Some key areas of focus for the future of the Fed include: 1. Adapting monetary policy to address emerging economic challenges, such as the impact of technological advancements and climate change on the financial system. 2. Enhancing financial regulation and oversight to mitigate systemic risks and promote the stability of the banking system. 3. Improving transparency and communication to ensure the public's trust and understanding of the Fed's decision-making processes. 4. Collaborating with other policymakers to address complex economic issues that extend beyond the Fed's traditional monetary policy mandate. If you're interested in staying up to date on the latest developments and decisions made by the Federal Reserve, be sure to subscribe to our newsletter. We'll provide you with timely insights and analysis on the Fed's role in shaping the economy, as well as practical tips on how to navigate the ever-changing financial landscape. In conclusion, the Federal Reserve plays a critical role in the U.S. economy, serving as the central bank and the guardian of financial stability. By understanding the Fed's history, structure, and the various tools at its disposal, we can better appreciate the profound impact its decisions can have on our personal and collective financial well-being. As the economic landscape continues to evolve, the Federal Reserve's role will undoubtedly remain a topic of significant importance and ongoing discussion.